Hey guys, hope everything is going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. Alrighty, so I wanted to touch base on Jerome Powell raising interest rates once again 50 basis points as expected. Now, he did indicate that, hey, look, we are going to be taking a more hawkish stand, or this is what he implied, right? We're going to be taking a hawkish stand compared to what the market was expecting. The market was expecting him to be a little more dovish. No, Powell says that they have more work to do. Now, in my opinion, the Federal Reserve will probably not be raising interest rates as aggressively. And the reason they won't be raising rates as aggressively is that it's going to destroy the economy if they do. I mean, you have what, the Fed funds rate that's greater than the 10-year yield. That's an inversion of the yield curve, and that's not usually good for the economy. So they'll have to pivot, whether stop raising interest rates or just even starting to cut, because that's going to make the banks have major problems in the future. Now, the thing is that the question we should ask, did Jerome Powell just crash the market? On a temporary trading perspective, this got all the longs, made them liquidate their longs. And there was also evidence on the technical side that the dollar was probably going to rally. I put a hedge about a long dollar position, and I did that just because, hey, just in case, there is a correction, I want to be prepared for it. Now, we haven't seen the dollar rally as strongly as maybe I thought it would, but I think that it's going to be like that. Don't know the exact time frame. I'm not talking about years. I'm talking about maybe a month, within a month or so. But this rally in the dollar index will keep these stocks under pressure, keep collectibles under pressure, keep precious metals under pressure, crypto under pressure, and so on. And just because we had a great CPI or better CPI report than anticipated, well, traders are looking more at the Fed and what they're doing. Now, looking at the CPI numbers, you have to remember you have basically shelter, housing and shelter. You raise these rates, and it's going to be hard for people to finance real estate. So obviously, some can pay cash if they're fortunate and they're rich. But the reality is, you keep pressuring, you keep raising these interest rates, it becomes harder for the average Joe. And if it becomes harder for the average Joe, they're not going to be paying an arm and a leg for rent. They may get roommates. They may move back with their parents. So that will, in my opinion, put downward pressure on rent, the cost of living for that part of our lives. And come January and February, I think people are going to get bullish again. And the Federal Reserve may raise rates, but not to the extent they were. They're raising at 75 basis points, then 50 basis points. Then what are they going to do? Raise it at 25 basis points. So it is what it is. So the question again is, did Jerome Powell crash the market? No, I don't think he is going to crash the market. Now, we could see S&P around 3,700-ish. This is from technical trader Dave Brady. But I view this as a buying opportunity, not investment advice, right? All these dips, I want to gobble shares up. Obviously, our portfolios may not look good, but this is more of a longer term scenario. I'm looking at it, 16 months from now? I expect markets to do well going into 2024. Now, once it gets to 2024, then we're going to have to look at the economic situation. I believe we could be on the cusp of a deflationary recession. Right now, everyone's talking about inflation, inflation, inflation. I think what people are going to be talking about a couple years from now is deflation, deflation, deflation. And then the inflation cycle starts up once again. So, just wanted to leave my thoughts up about this. I know some people were, or one person in my other channel on the live stream, he said, hey, can you do a video on this, on inflation? Now, inflation, obviously, I don't like inflation. I don't like money printing. I don't like geopolitics or political events which lead to higher inflation costs. Now, putting that aside, what is going to happen, right? What do you think is going to happen? I wanted to ask you guys regarding all of that. Because in my opinion, we're going to see a rally next 15, 16 months, but then pain will come shortly after that. And I know a lot of people right now are frustrated, but once again, don't get over levered. Make sure to put your thinking cap on. Don't use emotion, use logic, use reasoning. You don't want to be selling, in my opinion, of quality assets, keyword quality assets, at, some people would call bargain basement prices. You sell into strength and you buy weakness. You don't sell weakness and you don't buy strength, absolute strength. And that's a hard condition for many of us to break. But wanted to point that out, guys. So I don't see a huge crash, maybe S&P 3700, but we're back up to the upside in my opinion. And I believe that the CPI numbers will come in favor of the consumer and of the market, which will pump everything up, guys. Anyways, guys, remember to smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.